Kevin, welcome to the channel. Another wild day in the markets today. At least it was wild in the first part of the day. Second part of the day, we had some recovery. Definitely had some optimistic signals that we'll talk about in a moment. But that first part felt really wild. It felt like being on one of those roller coasters that you get in Six Flags or Disney. It was up and down, and it was down significantly for one point, which hopefully didn't cause all of you guys some anxiety. But if you see on your screen here, this is a tool that I like to use and I like to look at that helps me quickly analyze what sectors, how the sectors performed on the day, how individual companies and individual investments performed on the day. And you can see there's a lot of red. There's a lot of red and a lot of green. But in particularly some of the biggest sectors for us, we've seen some movement and some negative movement in those over the last couple of days. But I do feel there's optimism. The reason why we've seen those is obviously first and foremost, it's been driven by the financials. If you look down the lower left, you'll see that JP Morgan lost a little more today, but we had a bit of a step back with Bank of America, with Wells Fargo, with Citigroup. Those stocks all slid today by 1%. Bank of America over 3%, Wells over 4%, and Citibank over 3%. So the banks are driving it down, particularly with JP Morgan coming out with the earnings that they did yesterday. We also saw a little bit of a kind of dial back in the technology segment. So NVIDIA has been a little slow over the last couple of days. They've had some great news, and you may have heard that they approved their sale of their H200 chips to China. So I think there's some optimism ahead for NVIDIA. But broadband also had a rough day. Broadband was down, over 4 percentage points in the day. That's part of it too. The tech area is driving down the market. I think the other areas in general, a couple things is that just the market reaction to macro data, inflation, the jobs report that came out. Also, I think the other piece is the geopolitical and kind of global risk that we see. The Iran situation, the ongoing oil situation that's happening. It's causing some investors to pull their money out of the market and seek safe havens like bonds, metals. We did see a big move in basic materials like gold and silver. Copper has been up. And we've seen some T-bills as well moving. So overall, it's kind of natural what we're thinking. I think we'll have a reset. If we start to look at the market itself, I was encouraged. Hopefully you're as well. If you take a look at the Dow Jones here on where we started, wild day about midday. It looked like it was going to be a rough one, but really nice recovery in the afternoon. Closed the day of, just losing less than 1/10 of a share point, down 42 points. I'm optimistic to see how this is going to kick up tomorrow. There's been some great news with top companies. So let's see how we start off the day tomorrow. But in general, guys, I got to say, I want to kick this video off and talk a little more about exchange traded funds that are EFTs that we talked yesterday, because I think in these types of times and in general, they're just great investments for you to take advantage of performance of all the companies in the American economy, but also reduce your risk a bit. And I want to focus more on a sector EFT. Yesterday, in videos I did yesterday, focus more on the S&P 500 EFTs. But let's say you're like me and you're more interested in a particular sector and what's happening in that sector. Well, you can drive and find an EFT that's specifically focusing on, let's say, technology. That's the big one for me. I really love looking at the AI space and companies that are in that space. So let's jump over, but let's first say, why I like them is you don't have to, like I said yesterday, you don't have to pick the needle in the haystack. You don't have to catch lightning in the bottle with these. You have top performing companies that help each other, or when one dives, the others will help each other out. It's like this graphic that I have here, which I kind of love. I'm going to throw up on the stage. It's like if you were walking through an orchard, you don't know which is the sweetest fruit on the tree, but if you were able to pick all the fruit and test it later at home, then you would be able to truly know. And this is a great example where an EFT, a sector EFT like XLK or VGT is catching all of these companies and investing all of these companies. So you can get into the market for as little as $1, $10, $100, and you can own a piece of all of these fabulous companies for as little as $10. You can buy fraction shares of EFTs and you can sit back and let your money grow. Let these fund managers manage them and drive performance for you, which I'm going to show you in a moment. That I also love is if we just jump back over to what we were looking at before, and we look at some performance of these kind of top three that I'll call out. You can pick whatever EFT you want, whatever sector EFT you would like. I'm not recommending these. These are just three products that I think are good products. XLKs from State Street, VGT is a Vanguard product, and Chat is a newer one from Round Hill. But I want to call these out because they specifically focus in on this technology sector. And if you look, if I just jump down here, oh, hold on, got to pull that back. Jump down here and just show you some performance. You know, again, for me, I'm a long-term performance. I'm not trying to gain 20% in a week. That's really risky. It's volatile. I'm a little older. Like I said, I've been investing for 30 years. So my risk threshold may be a little lower than some 20-year-old investors out there that are ready to take on a lot of risk. But I think these companies do invest in excellent companies that have tremendous upside, and you'll see performance. If you look at year to date, 1 year, 3 years, and 5 years across the board, XLK and VGT have been in the market longer than Chat, so they have longer history. But if we just stay at that 1 year mark, you know, XLK drove almost a 30% return on your investment for 1 year. VGT, almost, 26% return. And Chat is the newer one, 56% return on your investment in 1 year. And you may ask, like, what are these companies investing in and why I like them? Here's their top 10 holdings of these sector EFTs. You can see across the board, very strong in NVIDIA. Like I said, I am a technology sector, AI driven semiconductor companies. That's what I want to invest in. That's what I want to watch. And I keep my eye on in the news every day. You can see that these EFTs are investing in those companies, whether they're Google, NVIDIA, Microsoft, Broadband, SK Hynix, really strong companies that have driven tons of performance. So guys, that's my recommendation for you. If I can give you any call to action, these are super easy to do. You can open in any brokerage account, whether it's Schwab, Fidelity, Robinhood. You can search for EFTs. Simple. You can invest a small amount of money or as much as you want to invest. You can buy fractional shares. It's a great way to get into the market and not have to worry about really, can I pick the winner? Can I catch the lightning in the bottle? You get to own all of a market. You get to own these outstanding companies that are driving performance across the sector. So take a look at it. Let me know what your thoughts. Do you like EFTs? Do you think they're a great investment, or would you rather stick with an individual stock? Are there any stocks that you love right now that you want to share with the group? It'd be great to hear. And again, on the way out, give me a like, subscribe to the channel. I hope you have a great evening. Let's take a look at what the stock market does tomorrow morning when we wake up. Have a good one, guys.